everybody. I'm Candice Brannigan. I have recently joined Autochartist as a marketing assistant. I'd like to wish everyone a warm welcome, especially to all the new attendees. Welcome to our training room. I hope you'll find the session very informative. To our regular attendees, thank you for being back for today's session. Today, James will be doing a short presentation on quality indicators that Autochartist has to offer. Just a reminder that our events are interactive, therefore please feel free to ask questions or post comments during the session. Enjoy the webinar. James, now over to you.
Thank you, Candice. I want to say good morning, good afternoon, and good evening, wherever you are in the world. I'm speaking to you from Chicago, and it's 8 a.m., so we're having a good morning here. Tonight we're going to talk about introduction to quality indicators. It's, if you can see my screen, it's this key area over here in the under the resources and education section, and this is the section that covers tells you the symbol you're looking at, as well as the chart pattern, the interval, and again, as I mentioned, these quality indicators. Now, to start with, Autochartist has determined that these following factors are key to understanding the chart pattern. And we have the initial trend, the uniformity, the clarity, and the breakout. Okay? And overall quality here is really an arithmetic average of the four that I mentioned. Now, what we look at when you trade is a lot of times there's psychology involved and how comfortable you are with a pattern, and maybe by your definition or some experience that you had in the past. In other words, if we have a pattern described as a triangle, you naturally want to see a triangle, or if we have a channel, your eyes and your brain are geared towards looking for these particular patterns that fit what you believe they look like. And so by ranking and rating these indicators, Autochartist tries to enhance that experience for you so that you can go right to the pattern and react to it as a trader should. The first one that we're looking at here is the US dollar Japanese yen. And you can see that this is a channel up pattern. And just by looking at it, you can see that it's a very clear pattern because it's got the basic definitions of the channel. You know, the lines are parallel and the market's trending inside the channel, and that's what you want to see in a channel up pattern. And we have another one here in the euro. It's a triangle pattern, ascending triangle pattern, and you can see also that visually it's appealing to you. But there are different factors that come up in a trade, little subtle things that could make one particular pattern better than another, and that's what we're going to talk about today, is how to use these quality indicators to enhance your trading experience and improve your success. Now, the first thing we'll look at is the initial trend. Okay, you can see here this is a highly rated initial trend pattern on this chart, and the initial trend measures the strength of the trend prior to the chart pattern's formation. It should come up there in a minute so you'll be able to see it a little bit clearer. The main thing that you want to see is this action here represents the initial trend. Okay, it's the action that takes place outside of the chart pattern. Okay, there's two quality indicators that look at the action outside of the chart pattern. That's the initial trend and the breakout. And they are fairly closely related, because in chart pattern technical analysis, in the theory of this of chart pattern technical analysis, there's a strong correlation between the size of the initial trend and the size of the breakout. And so if you see a strong or highly rated initial trend, you tend to see a strong and you get a strong breakout. It gives it a little bit more strength, a little bit more power to reach that target zone that Autochartist determines. So we try to work with the initial trend and the breakout trend together to try to correlate those two numbers. It doesn't mean that if we have a high initial trend, the breakout's going to be automatically a high quality breakout, but they do want to. This chart pattern has a strong initial trend. Okay, now this is part of the reason why we have a strong trending pattern, because of the strength prior to this pattern formation. Okay, so that's with the channel. If we look at the euro, we'll see that this is a triangle chart pattern, which is a non-trending pattern, and it tends to be a pattern that leads to breakouts. So come up here in a second. When we look at a triangle chart pattern, we are looking at a pattern that is going to lead to a breakout. So we want to see a high initial trend, and we can then expect a high breakout. And that's how it works with triangles. Triangles, because of this narrowing here, the support and resistance lines, tend to indicate breakouts. So if you're going to look for a pattern that has a strong breakout, you want to make sure that you're looking at a strong initial trend. Okay? Now, when you're looking at the initial trend, Autochartist takes into, you may see a small part of the picture here, but Autochartist takes into consideration a trend that may have begun a while back, just for purposes of clarity and to keep the chart small on the screen. But so these chart patterns, or these initial trends, could be long trends that start out for several days or several weeks or several hours before the pattern begins. So Autochartist, when it gives it a high rating, it tends to look at a bigger picture than you're seeing. Now, if you wanted to see how to set up the initial trend, you could go to a pattern. You can go to the search, and you can check, for example, in this case, I've already prearranged it. You can go down to the advanced search, and you can look at, you can set your initial trend at any one of these numbers from 0 to 10. If you set it at 0, you're going to get a large population of trading opportunities with the minimum initial trend ranging from 1 through 10. If you set it at 5, for example, like I did here, you're going to look at initial trends that are rated from 5 to 10. If you set it too high, you're going to run the risk of a low population of trading opportunities. When you do trade, it's important that you have enough of a sample to work with. You don't want to have too many, you don't want to have too few. You want to have something in the middle so that you have some kind of a quality filter, because again, that's the idea is to try to pinpoint the trading opportunities that are higher quality. Now, the other thing that we look at is the uniformity rating. Okay. Now, a uniformity rating is deals with what's going on inside of the triangle or inside of the chart pattern. So in this example, again, we're looking at whether there's some clarity or some equidistance between these tops, okay, and between the bottoms. Okay, you want to see that there's some kind of flow going on in the chart pattern, and that it's not just a choppy pattern. There's some markets, for example, if I went to the energy markets, where because of the trading activity and the amount of volume and the amount of traders, that sometimes you're going to get this kind of choppy trading action. Okay, and you can see that that type of choppy trading action gives you a low uniformity rating. But other times when you're working with, say, a Forex market, which has a lot of volume, you're going to get a higher quality uniformity in the market. So in this this example, you can see this is a 2 rating for uniformity, and that's because there really isn't a correlation between these tops. You can see that from this top to this top, there's a lot of space or a lot of time that's gone by, and then the next top that comes in, there's a shorter space. So you don't really see that uniformity, and the same with the bottoming action. So this tends to be a lower rated uniformity rating. Also, this type of trading inside here, where you get choppiness, that also is a low, gives it a low uniformity rating. Now, it doesn't mean the pattern's bad, because again, it's a channel, so you want to see, is it working inside the channel, are the lines smooth? But if you're going to use a uniformity as one of your indicators, just remember that it may not be high quality all the time, but other factors may be high quality. Now, when dealing with the uniformity, keep in mind that traders by working with these patterns, the traders actually create these patterns. Okay, so if there is uniformity in the pattern, it tends to mean that institutions are getting involved in the trade, that they're buying at certain intervals and certain price movement. So they're creating a very clean kind of zigzag pattern, and that too enhances your trading experience, because you want to know if it's small speculators behind the move or if it's big institutions. If you have institutions and banks behind moves, they tend to keep the patterns intact, and they keep the patterns clear and clean. Okay, they're trying to get their orders done in a systematic manner, and that systematic trading creates these very clear tops and bottoms and these equidistant tops and bottoms. When you have a market that is absent of these big traders and it's left to small speculators, like that crude oil that I showed you recently, that it tends to indicate that there's small traders in the market, and they can't make up their minds, so they're swinging the market up and down without any clarity and without any uniformity. And that's the difference. Usually your better trades take place when you're dealing with the larger traders. Okay, when you're dealing with the traders that have the money to support the moves. They're not going to change their mind all the time to create choppiness. They want order and they want good flow. And so that's the kind of market you want, and that's why uniformity is important. Okay, you want to make sure that there's big money in the market and that it's an active market and not a thinly traded one. In this example, this is the US dollar, Canadian dollar. Again, I'll blow it up here in a second. This is going to show us that that there is a high uniformity in this particular chart pattern. Once it pops up, there we go. You can see that there is some uniformity here between these tops to tops, and then finally the breakout, and also the bottoms to bottoms. So it's a pretty clear pattern. Okay, as I mentioned before about the initial trend, in this particular pattern, the initial trend is very strong, and when we had the breakout, you could see that the breakout was also very strong. So these two, breakout and initial trend, work together. So it's a very clean pattern. It's appealing to the eye. It's an active market. Those are the types of things that you want as a trader. You want to be able to see that, and you want to know that there's money behind the moves, so you're not getting any false breakouts. Now, another indicator that deals with what's going on inside the chart pattern is the clarity indicator. Okay, this too here is a highly rated clarity pattern, and clarity deals with the components that kind of skew the results, and that is a price gap, or price gaps, and price spikes. Now, at times, because of trading conditions or a shift in the news, you're going to see some gaps, and those gaps are part of the movement. But if you get gaps in something, in an instrument that you trade, that just randomly come up, that usually indicates that the markets are thin, that it's being dominated by small retail traders or small speculators and even insiders. It happens a lot in when you trade equities. Not every equity is very popular. And so those types of gaps tend to skew the pattern because they show rapid movement, and they show maybe some breakouts that you think is generating a trend change or the start of a new trend. But you find out that markets that are thinly traded that are full of gaps are usually yield false breakouts and false results. And that's the reason why Autochartist looks at this clarity indicator. And I've looked at a lot of programs out there, and many of them do not have a clarity indicator, that they just tell you to accept the pattern as it is. But I think this clarity indicator is a very good tool to have, and I said it's one reason why you'd want to have Autochartist, just because of this extra filter that nobody else has. The other thing is price spikes. Okay, if you get a thinly traded market, you're going to have price spikes. So the clarity indicator looks for price spikes and price gaps. Again, because it wants to make sure that you know whether these moves are true or whether they're just false moves. So the higher the clarity rating, that means the lower the incidence of these price gaps and price spikes. So I try to get or turn up my clarity indicator as high as possible, because it acts as a filter against choppy, gappy type markets. The other thing is, because we're trading, many of us trade non-exchange instruments like Forex, it's very difficult to get volume. And when you're trading on an exchange, you can get volume. And volume is an indicator of clarity also. And so when you don't have a volume to look at, you want to have another indicator that shows you that the market is true and that the price movement is significant and realistic. Okay, so again, dealing with the quality indicators, realize that the uniformity and the clarity deal with what's going on inside the pattern, while the initial trend and the breakout deal with what's going on outside the pattern. So as a trader, you're going to try to hone in on what makes a pattern successful for you, or what pattern you like to trade, and a pattern where you can clearly identify the movement of the market, the stop points in the market that you want to use, and also the potential to hit your target price. So if you're trading and you're taking an opportunity that Autochartist has found, and you want to place a reasonable stop, or a stop that makes sense in the market, you don't want to have a market that has gaps and it tends to gap or tends to spike, because your stops tend to be hit or become less useful. So again, the higher your uniformity, the higher your clarity, the more confidence you'll have in placing your stops and in feeling that you're going to have your target price hit. Now, the last indicator that we're looking at is the breakout. Okay. Now, the breakout is important because it shows you that it tends to indicate momentum at the time of the breakout. Okay, so when you have a breakout above a resistance line, in this particular case, it measures the close above the breakout point. Okay, you'll see penetrations of these resistance lines or support lines periodically, but what Autochartist does is, if it clearly closes above the breakout area, it gets a high rating. And you'll also see that when you're working with particular patterns, excuse me, like a triangle, that you're going to get a lot of compression and a lot of sideways action, because by definition it's a non-trending pattern. Okay, so you can see that the size of the body of these candlesticks is fairly small, but as it starts to move towards the target price or the breakout price, that you're getting bigger bodies on your candlesticks. And then finally, when you get a breakout, it's a fairly sizable candlestick. So this gives you confidence that the market's going to move higher towards the target price. In Autochartist, the algorithm picks up on that increased momentum and that strong close, and that's how you get a strong breakout rating. And that too is a confidence indicator that this target price is going to be reached over a certain period of time. Now, the relationship between the initial trend and the breakout can't be emphasized more, because if you had a strong initial trend and traders just decided, well, you know what, we've had enough, let's stop the pattern right now, maybe some news is coming up and we're going to wait for some clarity in the market, then you're going to get this sideways action. Okay, now if Autochartist is predicting a continuation move, that means that after all this congestion takes place, that the uptrend is going to pick up right where the initial trend ended. So it's going to be as if this stuff in here didn't really exist. Okay, that's how these two work together. It's very important that you understand what a continuation move is, because a lot of times traders will look at the pattern inside here and they'll say, boy, Autochartist is saying that the trend is up, but I see that the trend is sideways or down. And where they're connected is, you look at the initial trend and then you look at the breakout, and you'll see that there's some continuity there. Okay, that's what continuation means, and that's how it works with the quality indicators. All right, let's see if we can find another high quality breakout. What I've done here is I've set my searches on low quality indicators or low quality breakouts. So some of these are coming up fresh. Yes.
Sorry, I've got a question from Muhammad Hassan. He says, when uniformity is not so great, do you recommend doing the trade or wait for a good uniformity?
Well, I'm more of aggressive as a trader. Part of trading is knowing, your idea of, aggressiveness and how you want to trade. So I tend to lean more towards higher initial trend and higher breakouts. The uniformity serves as a warning that conditions may be, not perfect. It doesn't. I don't think it negates the trade. I don't think it has that big of an influence on whether a trade is going to be successful or not. But what it identifies for a trader is how to approach the market. If you see a low uniformity rating, that may tell you that there's not a lot of order in the pattern, and so that you may have to give yourself a little bit more room for a stop, because the trade is a little bit sloppy or choppy. Okay, so that's what it tells me. It doesn't tell me don't take the trade. I think the uniformity indicator has actually a low correlation with the success of the trade, but what it tells me is that I should give my trade some room, because conditions aren't perfect. If I get high uniformity, that gives me confidence that there's some big money behind the move that's controlling the chart pattern. And so then I have a different mindset when I approach the trade. But I don't pull out of a trade or decide not to trade something because of uniformity. It just tells me how to place the stops and how the market is trading, whether I have to be loose or tight on the stops.
Okay, great. Thanks, James. Yes, one from Mike Chandler. Preferred setting for clarity. He would just like to know what the preferred setting for clarity is.
I think the preferred setting should be a 5 on the clarity, because that just, it's dead, it's center, and it gives me enough opportunities, and I know that those are clean patterns, that they're not a they're average to better than average in terms of gaps and spikes. I can turn it up a little bit more to get even higher quality, but I like to work with a 5. And again, I want to know when I'm working with a non-exchange instrument and I can't really peak at volume, I want to know that it's not swinging all over the place, and it's not full of gaps and full of spikes. And again, the inside of the pattern is telling me the uniformity and the clarity is really helping me determine my stops. Because if a market is low quality, low clarity, low uniformity, then what happens is, as I mentioned earlier, that you're going to get some wild swings, and you don't want to get caught buying strength and then having it whipsaw back down and then having it go back up again. So the stronger the clarity, the stronger the uniformity, the less likely you're going to have that whip in the marketplace. Okay, then that tells me ahead of time, because I want to prepare for the breakout. That's essentially what I like to do. I like to work with triangles. I like to work with breakouts. But I don't want to spend a lot of time going over the history of the market and how it trades. The beauty of having Autochartist is it searches through all these chart patterns, and it tells me ahead of time what I should expect or what is likely to happen in terms of the type of trading action that I'm going to have. Now, also, the uniformity and the clarity tend to move with the breakout. And what I mean by that is, after the market breaks out, it's not necessarily a straight shot up or down into the target. So if I have a choppy pattern or low uniformity or low clarity, that characteristic is going to carry over into some of the other patterns that I follow. So let me go back to my Forex majors here. If I'm getting a breakout in this particular area here, you can see that I had high quality, high clarity, high uniformity throughout this pattern. So when I did get the breakout, it did follow through fairly quickly before it came close to hitting this target and then fell back down. If I get a strong breakout on a pattern that has low uniformity, it may zigzag its way up to the target. If I get high uniformity and high clarity, it has a tendency to move straight up towards the target. I hope that explains it better. So that's how I use what's going on inside here to tell me, yes, you should use tight stops, or no, you should use wide stops. Okay, any other questions there? All right, so putting...
Thanks, James.
Sure, no problem. Now, also with the breakout ratings, you can see that we have this one here is a maximum 10. And again, that's related to how this market broke out through resistance. You know, was it just a wick of the candlestick poking through? But Autochartist says, no, it's got to be a close above this line. And the more, the higher it closes above the resistance, the stronger the breakout. And that's, again, bringing it closer to the target area. And to recap, if you're going to, if you had a choppy pattern or low uniformity and clarity inside here, you're going to tend to get the same type of trading on the breakout. If you had a clean pattern that was formed here, you tend to get one that works the same way. Traders have conviction behind their trade, and they're willing to support it until it hits their target price. And that's what I've seen through my working with the program, that's how that works together. Uniformity and clarity tell you how it trades and basically how to work your stops. And the breakout and initial indicators tell you how strong the conviction is behind the moves. All right, that takes us to the chart patterns. Now, we also work with, Autochartist also works with Fibonacci patterns. And these types of indicators here are very simple. The quality indicator is basically the same. It takes the average of time and price and clarity symmetry. Now, if you know a little bit about the Fibonacci patterns, these are pretty much, these are precision moves. These are measured moves in this forecast here. What Autochartist is doing is it's taking the past swings in the marketplace and it's moving a line forward to forecast when and where a particular price could be hit. So you have different indicators. And it also gives you an area where you're wrong. So in this particular case, we did have a projection up here, but it also gives you a quick area to exit if you're wrong. You're not going to hang on to this forever waiting to go here. So it's very clear that if a pattern doesn't work, the Fibonacci indicator will tell you right away that you're wrong. Now, setting that aside, what this means here is that when you have a high price symmetry, it means that our Autochartist has determined that these patterns here in the past have come very, very close to exact retracements, exact Fibonacci ratios and retracements. It's not precise. There's an error factor built in to the analysis because, after all, you want to be able to trade the market. If you waited for everything to be exact, you really wouldn't have a lot of opportunities. So Autochartist looks at the ratios of these particular moves, like for example A to B, and as the market starts to come down into C, Autochartist starts to approximate where the retracement should take place. And if it stops in that vicinity and then begins to move back up, it determines that, yes, it fulfilled the requirements for an ABC pattern. And so the closer it comes to the exact price, then the higher the price symmetry is going to be. Okay, let me see if I could find some more examples of some Fibonacci's. Let's see here. Again, we're going live, so sometimes, the day before a big U.S. report like tomorrow, and also the situation in Europe, it slows down a lot of the trading opportunities because traders are just standing aside until there's some clarity in the marketplace. So sometimes doing webinars before these reports tend to skew the patterns a little bit. Okay, here's the New Zealand dollar, Canadian dollar. I'm going to blow this up here as I talk. Again, when you're looking for high quality price symmetry in a market, it means that a portion of this pattern has already fulfilled the obligation that we're looking for, the precision that we're looking for in terms of price. In other words, we've taken the equation from A to B, and once it starts to move up, if Autochartist is looking for a 3-point extension, then it has an area that the market has to reach. The closer it comes to that area, the higher the price symmetry. Okay, now some patterns, some Fibonacci patterns also incorporate time. So they take a ratio and they look at how long a market took to move from one point to the next, and they look at that area to see if price and time symmetry have worked out. Okay, so for example, if you have a market that drops for 12 candlesticks and you start to get a retracement into a price zone, and it's also at 12 candlesticks, then that would give it a high price and time symmetry rating. Okay, so if you're a precision trader or somebody that likes precise turning points, precise entry and exit areas, then Fibonacci, the Fibonacci patterns that Autochartist determines should be on the top of your list. Okay. Now it is possible too to combine Fibonacci's and your chart patterns. So that would be another webinar. But in this particular case, if you're going to get high price and time symmetry ratings, then that means you're almost looking at perfect retracements in the market. Okay. If you loosen it up a little bit with your quality when you do your searches, then you're going to get more patterns. And if you tighten it up, you're going to get patterns that are very, very precise, but they're going to be very rare. Oftentimes when you trade, you'll see that you'll set up on a chart, or you'll see a chart pattern that says the market's going to go back 50%, like in this particular case. When you're working with a three-point extension, the tendency is after point C is reached that it's going to drop into these Fibonacci retracement areas. So what happens is, as it starts to approach 50%, it doesn't often stop there, and it starts to move towards the 618 area, this Fibonacci retracement. And because people like to trade these patterns, 50% retracements and 618s, orders start to pile up in this zone. So the passive trader is going to be the one who's going to put a price exactly on one of these lines. Okay, and as those orders begin to fill up, other traders start to notice all these orders filling up here, and they say, well, I'm never going to get in because there's too many buys ahead of me. So they start to put their orders somewhere between here. Okay, that's why you'll see markets, they sometimes don't reach the exact numbers that you're projecting or people are looking for. And that's the reason why you have to use that little cheat factor. And Autochartist, again, uses a little algorithm or an error parameter. It's an acceptable error parameter, meaning that if it does everything it's supposed to do and it comes within a certain tolerance level of my target, then I'm going to, give it a high price or time symmetry rating. So keep that in mind. The more precise you try to get, the less likely you're going to get filled. That's the quick way of saying it, and that's what when I was trained to be a trader with different groups and stuff, we'd always say that. If you try to be too precise, then you're trying to you're basically telling the market that you don't want to trade. If you know your little cheat factor or your margin of error, then that tells you that you're aggressive and you like the particular move. So Autochartist does that work for you, though, because it's going to give you your price and time indicators, your clarity ratings. Okay, so let's see what this one comes up. This is a 15-minute Japanese yen. See if it's going to come up here in a second. This is basically a fresh signal that just happened over the short term here. This is a more complex pattern. It's called a 3-drive. And it's got a high price clarity rating, and that's because, or price symmetry rating, and that's because it is a precision move. This action here has created a breakdown to point C, and Autochartist has determined that it is within the tolerance level, and now we're looking for a move to the target. So this is a higher quality price symmetry chart pattern. Okay, so again, if you're a precision trader, you're looking at Fibonacci's and you're trying to get high price symmetry ratings. Okay, if you're even more precise, then you're trying to look for patterns that have both high price symmetry and high time symmetry ratings. And those two, again, depending on your tolerance for risk, are going to determine how high you want to make those settings. Now we also work with what we call key levels, and key levels is pretty straightforward. Okay, key level trading involves drawing a straight line across the marketplace and determining, based on the past, how strong or how weak this particular line is. Okay, if the line has been tested or touched several times in the past, then it's going to get a higher rating. So we look at how many times in the past this line has been touched. Here's some action in the past where this 161.39 level has been touched several times. Here's, you had a breakout through it. Here you had support, then it rallied again, and it hovered on the line here. So it kind of shows you, based on the past, that this particular price, 161.39, triggered a lot of activity. Okay, and then finally you had this big rally, and when it did break through it, came right back to it and tested it. So this is a high quality breakout line. So it tells you the next time it approaches it, that you look at, you know, the momentum going into the line. This candlestick here is pretty huge, and that tells you that there's some buying behind it and traders have some conviction. So since we know the importance of this line from the past, and Autochartist saves you a lot of time because it finds you this price level, that when it finally breaks through, you can see that it looks like it's on its way towards the target zone. So the breakout rating of a key level, it's not very complicated. All the work's been done because Autochartist looks at what it's done in the past, how many times this line has been touched or been significant support and resistance, and then it rolls that line forward, and you just wait for the market to approach it. So in this case, we look at both approaching markets as well as breakouts. Okay, the one I showed you was a breakout. When you're looking at, for example, U.S. dollar, Canadian dollar, this was another fresh one that just came up. So allow it to populate. Okay, you'll see that in this particular pattern that the line has been tested in the past. It has shown qualities of both resistance and support, and that now the market is approaching it. So you can see that the market zigzagged over this line several times. And here, what I like to see here is, because I'm an old school guy, and the tendency is, one of the first rules I was taught is that old resistance tends to become new support. So when I see this pattern here where it's hitting this line several times as resistance and then finally breaks through and it comes back down to it, I have more confidence that it's going to move higher, because this means that these old bears, these old guys that were defending this price zone here, they're out now, and that those shorts have turned into buyers, okay, at this particular level here. You can see even after the market rallied, there was one spike down to the level, checked it out again, and then took off. These are just little tiny confidence indicators that should help you as a trader and make you feel that you're on the right side of the market. Now, depending on how you trade, if you're a momentum trader, then you'd like to see the market go straight through, okay? And if you're a swing trader, like I tend to rotate depending on the market conditions. If I want to trade momentum, then I'm usually looking for a market to go straight up. If it starts to hesitate, I'm out. That's how I trade momentum. If I'm going to trade it as a swing trader, then I want them to come to my price, and then I have a little bit more control over where I want to get in, where I want to get out, and also the size that I want to put on. Okay, so when I use key level breakouts, the first move I look for is the momentum move, and as soon as if I'm getting all green on the candlestick on the upside, I'm staying with it. If I start to see red, I'm out. I don't wait for 2, 3, 4 bars before it tells me to get out. That's momentum trading. When I trade swings or I'm looking for a precise entry, then I use the key level as a support or resistance price. And so the number of touches of this line in the past, the significance factor here, that tells me how strong and how significant that number is. So that's been 45 minutes, and I will now field questions from you guys, and I'll see what I can read here.
James, I think most of the questions have been answered. I can see one or two here. Is this webinar being recorded, and will it be sent out from SJ?
Yes, it's being recorded, and it's going to be posted. I think you'll have access to it either on the website or on YouTube. You should visit YouTube. It's got a lot of good videos on there. Our channel, the Autochartist channel, has educational videos. I personally select a market just about every day that I figure I've calculated has some pretty good potential. I work a lot with 1440-minute charts, which is, you know, a lot of times Forex traders that want to hold positions overnight, but I work with the 1440-minute on a lot of those videos, and it shows you some good quality long-term moves, and you kind of get a feel for what, you know, I look for and why you should have this program. Whether you're experienced or a novice trader, I really think you should have the program, because you can't have enough aid, you know, to help you trade. And the reason is because I work with three factors. I work with pattern, price, and time. Okay. Now, at times you have to know that you're going to have price patterns. It's prices that are where people are buying support and selling resistance. So they're not really creating any patterns. They're not really creating any movements in the marketplace. And so what they're doing is they're just buying support and they're selling resistance. Okay? That's a price trader, or somebody who uses a moving average and just wants to look at price. And then you have the pattern traders who look at triangles and wedges and channels and things like that. All right? Then you have your timers who look for cycles, or they count how many bars up, how many bars down. Now, putting them all together gives you a better chance to trade. So if you're really good at determining price zones for support and resistance, then you want to use Autochartist patterns to determine if the pattern is taking place with it in zones that, you know, you identified as good support or resistance. So you want to use Autochartist as by itself, but you also can use it to enhance what you already know. So even if you're experienced, don't be shy to get, you know, help with some other program. And the real reason, you know, one of the reasons, the biggest reason I should say, is that when you're working with Autochartist, it's taking, it's doing a lot of the work that you couldn't do. You couldn't search through all these opportunities and still pull the trigger on a trade. So it saves an awful lot of time. It's high quality stuff. We also have performance stats, and so you can see how well a particular market performs, how well a chart pattern performs, and you know, what the market has done using different quality indicators. So there's a lot of information on the site, on the platform. And like I said, whether you're experienced or a novice, you know, it's got enough to tell you, you know, to help you enhance your trading experience. Let's see. It says some charts are 15-minute interval and some are 30. Well, the major time, we've just zeroed in on the major time frames: 15, 30, 60 minutes, 240, and 1440 are the major time periods. Yes, the answer there. Yes, that's the standard way to trade Forex. That's right. Let's see what we have
James, I'd also like to just inform everybody that all of our webinars are recorded, yes, and it's all available on the Autochartist platform. We've created an educations and resources tab. All of them are recorded and saved there, so that if they would like to research it and listen to it again, it's available there.
Couldn't have said it better, Candace. Here's the, I click on this tab up here, and I'm taken immediately to this section here. And you can see there's an introduction videos and a list of introduction videos. There's manuals, there's downloads for MT4, research articles written in various languages. So there's a lot of information on this particular tab. As far as your performance statistics, you can also go here and see based on chart patterns, based on key levels, on the breakouts and the approaches. You can see how successful some of these patterns were, and also for the instrument. So if we clicked on Forex, for example, we viewed chart patterns. You can see that by scrolling down, some of these percentages are fairly high on these particular patterns. I mean, you see that descending triangle over this time period that we researched is about 72% accurate in terms of hitting our target within our time tolerance zone. So here you can go by instrument. So once you, if you are a little skeptical about a particular pattern or a market, you can quickly go to this performance stats, and that'll give you some confidence. Sure, that market's good.
James, can we do one last question? I got one from Robert Crow. He wants to know what a price gap is.
A price gap? A price gap is when you have a candlestick or a trading bar, depending on how you chart, and you have a high and a low identified on that bar, and then the next bar, the low is above the high. So that would be a gap up. And if it gapped down, the high of the next bar would be below the low of the previous bar. I got a minute here. I'll show you really quick. They usually happen in equities because of the 24-hour trade in Forex. They're kind of rare. But if you're going to get one in Forex, you're going to get one on a Sunday night or Monday session. That's because of the break in the time. So when a market closes on Friday, news may come out and over the weekend, and so the Euro traders may drive the market up above the previous close. Let me see if I can find, let me go into my New York stocks here. Here we go. I know what I had to do. I was getting none because I didn't click the box. All right. If I pick the stock like, I know this one tends to gap. And I'll show you what a gap looks like. This is Apple. And I'll show you what a gap looks like. But if you're going to get one in Forex, it's usually going to happen after the weekend because some news took place over the weekend that made the market, that made bidders or buyers want to pay more than it was the previous day, and that's why it would gap up. And the same when you go to stocks, when this comes up here. When you have a stock, it closes at a particular price, and then the next day you get a higher price because of a report that came out, maybe earnings report. You can see that I'm pointing here. It's kind of small, but this is Apple, and this is a gap over here. This is after the release of the iPhone, and the market gapped up because traders said, you know what, this is a good stock. I want to get on it right now, and they're willing to pay up, so they made this little gap in the marketplace. If you're going to get gaps, if you trade futures, you tend to get gaps on days of like crop reports and things like that. So every market tends to gap at certain times, but those are gaps that are normal to the trade. When you get a gap because conditions are thin, that's what affects the clarity rating. If you get normal gaps that are taking place during the course of the trade, crop reports, surprise news over a weekend, things like that, those are normal gaps. But when you get thin trading conditions, those kind of gaps are the ones that the clarity indicator tries to filter out for you. Yes, any other questions? Let's see here.
I would also just like to let everybody know that our next webinar will be taking place on the 25th of October, 9 a.m. EDT time. The webinar will be about how get to know the personality type of instruments you trade with. And it's about power stats, market volatility.
There's one question here about specific ways to predict market trends. You have to remember, if you use Autochartist, and I suggest you do, if you don't have it, get the demo. As soon as I'm done with this, go to the website, get the demo, and start looking at it. Okay? Because there are specific ways using the program to look for trends. Obviously, when Autochartist determines something is trading in a channel, there is a highly established trend. Okay? The markets are going to rotate from trending to non-trending, from non-trending to trending. That's just the nature of the markets. You're going to get periods of trending activity because traders have clarity, they have conviction, the news is clear, everything's working, all cylinders, and they have confidence. They're going to keep buying it every day until they reach a point where it's either too expensive or the news is is unclear and they can't make up their mind, so they start to get out. Then once the news is clear again, the trend picks up. So if you set up you find the market you want to trade, such as the euro, and you look at channels and you look at triangles with Autochartist, you can forecast the trends. Okay, if you go from a triangle is going to be a sideways trend, so that's telling you, you know what? Keep your powder dry. Wait for the market to make its move. It can't sit in the triangle forever, because the apex of the triangle is coming up. It keeps moving towards that apex, and at that point, it's going to have to make a breakout. So that's why you want to work with that. And then once it breaks out of the triangle, then it's going to go, if it's a trending market, it's going to go into a channel. And the process continues over and over throughout the trading sessions, and you're going to get so you can predict when a market's going to change trend by just watching when Autochartist populates the list. If one day you look at all the major Forex markets and you see that there are a lot of triangle formations, well, what that tells you is that we have if you search this out here and you sort it and you start to see a lot of channels come up, that tells you that the market's trending. If you search this and you get a lot of triangles, that tells you that the markets are in non-trending. So watch these patterns and how they populate. Again, many channels, you're going to get trending markets. When you get a lot of triangles or compressed patterns, you're in an area where you should be ready to jump on the market at any time. The same with this type here. If you see a lot of emerging patterns come up relative to completed, that means the market's getting ready to do something. In other words, it's in the channel, but it's getting ready to do something. If you get a lot of completed patterns, that means you're getting a lot of breakouts taking place. So you can just follow these little subtle things on this screen here, and that'll tell you what mode the market's in, trending or non-trending. So that's the way I use it to predict. I'm not in the market all the time. There's sometimes, like this week when we have a report coming out Friday, tomorrow's unemployment report, you may see a lot of markets just drop off, a volume drop off, and things move sideways. So you probably see a lot of triangles. That means tomorrow you're going to start getting a lot of breakouts. And so that helps you, the knowing how the markets rotate between trending and non-trending. All right. Well, you know what? Thanks for spending time with me today. I really enjoyed it. You know, there's a lot going on in the marketplace. And as I said, this is a great program to have, whether you're a novice or a experienced trader. You want speed. You want a program that's reliable, something that's going to free you up to trade and to live life and to do things, you know, with your family and spend some time away from the markets. And the only way you can do that is if you have some automation, and that's how that's what Autochartist will deliver, the automation you need to find good patterns and then and help you become a successful trader.
Well, thank you very much, James.
Thank you, Candace. It's been great.
Have a good one.
All right, thanks. Bye.
Bye.